Created live on Fireside.
So welcome everyone to Where's the Beef? This is tech versus creative, kind of. And we talk about advertising, marketing, technology, and pretty much today's startup culture. Today, I'm going to start the show with a little bit of a bonus before I bring on my guest, Chase Harmer, who is CEO and founder of ProfitPay.io. We have so much to talk about, and I'm super excited about this, but I thought I would just start and let it sit back and listen to this first.
There's a lot of money going into FinTech.
Financial technology, or FinTech.
FinTech is moving forward.
The FinTech revolution.
The FinTech sector.
FinTech.
It's called FinTech, and it's changing economies around the world.
Why ProfitPay and why now? $4.5 trillion will flow through online marketplaces and stores this year, and that number is increasing 15% year over year, which will push 95% of all spend entirely online by 2040. When we started building our platform back in 2014, I was ahead of my time, and most people just didn't understand what we were building. But today, we are right in time, as the completed architecture is enabling some of the largest digital merchants in the world. Did you know 97% of all consumers that have purchased 2 or more items in the last 3 months have done so in an online marketplace? That's up 80% from last year alone. With almost $5 trillion in payments flowing through this space, it's mind-blowing to think that there's only 2 companies in the world that can support these types of opportunities. And ProfitPay is one of them. But before I dig into why and how that's possible, what is an online marketplace to begin with? An online marketplace is a third-party merchant selling physical items or services on a site that is not their own. And there are always 3 components to a marketplace: the consumer buying the product, the business selling the product, and the marketplace connecting the consumer and the buyer together. Marketplaces include some of the largest apps on your phone, like DoorDash, Instacart, Airbnb, Wayfair, and Grubhub, but also include online superstores like Amazon. So it's more than likely that you're using one of them today or have in the past. Online marketplaces rely on fintech companies like ProfitPay to collect these consumer payments. And through doing that, ProfitPay makes money on every purchase, refund, and settlement. Starting from the consumer purchase to the delivery of that product or service, as well as managing the payouts to that marketplace that's connecting both the consumer and the business for that transaction and the business that's selling the goods. But the reason why there's only a few competitors in this space is that it requires many years of compliance, hundreds of expensive engineers to build out the infrastructure, and tens of millions of dollars in hard costs before you can even make one single dime. Let's not forget about the capabilities to seamlessly support global payment processing, fraud prevention and chargeback management, digital banking and interlink accounting, mobile wallet technology, media spend attribution and analytics, ACH capabilities and third-party remittance, and of course, global currency conversion and treasury management. And let's not forget about card issuing capabilities in multiple currencies across the globe. ProfitPay has 22. This all requires time and money, but most importantly, time. We began building this platform back in 2014, which is why we're ahead of all of our competition and why we're capturing some of the largest internet companies in the world that are buying and selling things across our digital landscape today. The fact of the matter is that fintech businesses are siloed. Without a platform like ProfitPay, it requires merchants and marketplaces to manage all of this in many different portals with many different logins. And let's face it, you need an entire team that can operate all of these processes, systems, and mechanics at scale. It sounds exhausting because it is. ProfitPay has built an all-in-one dashboard and easy-to-use interface which includes all of these capabilities. And since we started 7 years ago, we went through many years of compliance and already spent millions of dollars to push fintech innovation to new heights so we could pioneer profit through payments and help internet companies make more money. ProfitPay provides better pricing, better service, more features, and more profit, with exclusive patents that protect what we've created. This makes our solution very unique for our users, giving them many advantages that no other platform can provide, allowing our clients to cross international borders and spend locally in any market, anytime, in any country, whether online or in person, which is why our valuation continues to climb as we sign billion-dollar marketplaces and multi-million-dollar brands. So, if you're ready to be a part of what's next in FinTech innovation and help us create the digital experience and economy that makes you more money, then we would love to have you along for the ride. Here's to the future.
I love that. And I want to use the sound effect here. Chase, welcome. Chase Harmer. I am so happy to have you on the show. You know, we were talking in the green room prior to this, and I do this show, and is my microphone too loud, or is that just my headset? And I feel as though it's too loud. There we go. Okay. And I come from D2C. So I come from managing campaigns for the past 30 years and growing up in the world of who's your payment processor when you ask clients, right? And then having to navigate them through those waters and the changes and the evolution of what has happened because of e-commerce and all of that. I would love for us to, now that we know through that recording, which I played it, not as an ad, everyone, that wasn't the intention. I found it to be comprehensive in what ProfitPay is and educational in a bit also. So let me just start with this. In just a few words, not just a few words, for me, a few words, what are your biggest pain points when it comes to startups understanding the critical engine that payment processing truly is across all the verticals as far as FinTech and why it's essential for them to take notice, stand up, and talk to people like you?
Yeah, sure. Well, I mean, I think today, if you're running a business and you're trying to be successful, you absolutely need to be speaking with the payment processor because everything's online now, right? So, I mean, you can't just go to open up a store and take cash at this point. People are all playing with cards. It's all mobile or it's all completely online. So payment processing, it's boring, but it's like the insurance, right? So it's like you need it. You have to have it if you're trying to grow and scale your brand. But it's at the centerpiece of like everything that we do. So, everybody has a card in their pocket, probably 3 or 4, so we're always spending, doing, and utilizing these tools. And so it's really kind of at the center of how we all live our lives. And yet people take it for granted. Actually, everyone takes it for granted. They do not understand the complexities, as boring as they might seem. But actually, when you get to learn about it, like all of the millions of transactions that are happening all of the time, and think about just the minute, tiny little piece of that transaction is going here, and a little bit's going there, and the money, right? Yeah, no, it's true. I mean, arbitrage is really financial arbitrage is what it is. And that's really what payment processing, the whole entire business was made up of. But most people that don't know about payments, or that most people don't know that there's a business in between those transactions, or right. And so I think most people, without actually understanding the business, really just don't know that that's a thing, a real thing. So, yeah, right. So talking from a B2B standpoint, right? From let's say you have a new startup and it's going to be a SaaS and it's driven by membership. I have this question I want to ask you because I got in a conversation the other night with someone and they were telling me that I come from old school, right? Processing. And it's like, okay, you can actually pre-sell a course and I'm like, and charge people's credit cards and get money to
finance your, kind of like Kickstarter thing.
Sure.
And I'm going, wait a minute, I don't. Back in the day, card not present, we had lots of rules. We worked for a lot of rules with Washington as far as card not present transactions because of, to protect actually the banks, right?
Yeah.
So is that true? How does that work these days when the transaction,
there's a lot of risk in that, right? So it's just future liability. So I think at the end of the day, there's definitely some banks that will participate in that gray area. But it's pretty gray. So like if you have a client that's really scaling an offer and is pre-selling and they never actually sell and they just walk away, that's not good, right? So
exactly.
Yeah. So but I guess there's got to be some sort of level of trust there for depending upon what they're doing. But I think a lot of tokens and crypto coins and things like that people are popping up with are kind of the same thing. They're pre-selling something that's not really real yet. But people buy into it.
I think, I was just wondering what the rule was, right? Because, we created the best practices for the continuity shipments and things like that, where, next to if you're online and you're buying something, you actually have the full disclaimer that we're going to reship this to you in 30 days, blah, 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 blah. And yet you don't see that disclaimer a lot anymore. And that was really something that the credit card processing companies really wanted you to have all of this disclaimer text, right?
Well,
up on your website.
I think that so people were running what was called trial before, right? It's not necessarily pre-sales, but they were basically, you were buying an item and then within 30 days you're getting another item, and people weren't disclosing anything, right? So you all of a sudden you would get your card charged. So there was like all kinds of FTC things going on.
Yeah, exactly.
But yeah, that absolutely made people go listen, where's the language? Are you telling people that you're going to charge them? So I think that's a lot more. We expect that type of language, but there are certain cases where that doesn't exist.
Yeah, it doesn't exist a lot anymore. And as a consultant, I always say, well, you have to put this disclaimer there. And they go, what are you talking about? I said, well, go to Guthrie Ranker's site and see how they do it with Proactive, right? There's this really bold, not bold, but it's right there and it's right next to the price point. These were all the rules that the FTC basically said you have to do with card not present transactions as we grew up through the industry, as we grew up and started to sell, online.
Yeah.
So I suppose it's changed. Let me ask you this. I'm looking at your website right now, and you do, I think it's funny, not funny, but I think it's cool. You do e-commerce, marketplace, online travel, media buying. It's like, these are kind of all of the things that my company, C Spot Run, would offer. And it's all in one place. And it makes for the ease of analyzing your data and making decisions across the board in D2C and B2B, but you're mostly B2B, right? ProfitPay is B2B, is it not?
No, we do. We deal with both B2B and D2C brands, right? And then we also deal with marketplaces that are connecting a consumer and a brand, right? So
can you explain? I'd like for people to understand that if I do a transaction on Amazon, talk me through that transaction.
Well,
talk me through what that looks like. What does it look like in the technical sense?
Well, in the technical sense, let's just use I'll use DoorDash as an example because it's kind of an easy one, recognizable name. Most people understand what that is, right? So DoorDash really is just a broker, right? So is Expedia. So is pretty much any app on your phone nowadays. Nobody owns the product or service, but they're connecting you to that product or service. The inherent issue with that is that when the consumer pays DoorDash, they still ultimately have to pay the Chinese restaurant or the sandwich guy or the chicken guy on the back end. And therein lies part of the technology is payments in, payments out. Paying people in real time. That's really the future of online commerce. And the majority of all business online is going to be some shape or form of a marketplace to some extent. And if you look at, and I'll just use this as an example, if you look at Amazon, Amazon is a gigantic marketplace. I think everyone can agree with that. But there's marketplaces within the marketplace, right? So there's there's ecosystems that actually like live and breathe and grow inside of that marketplace, like separate marketplaces that exist inside of there. So I think, that's really the future, and that's what's happening. And if your direct to consumer brand is big enough, guess what you really have? You can absolutely become a marketplace and do different things. So I think people are looking how they can expand their bottom line. How do you expand, the business without actually doing much anything different? And it's an easy way to do that.
You want to be able to say, hey, tech startup, or hey, startup, we're going to make you money at the same time as bring you all of these services that you need in order to run efficiently.
Right.
But at the same time, look, we're going to make you money.
Sure. And I think we lead with the profit, and then as a conduit, as a caveat to make that additional profit, we do the processing, right? So it's basically not like back in the days, payment processing was all there is, right? Now everybody's developing technology to make our lives easier by using these cards in your wallet, or banking apps and all these different things that are helping us organize our lives. I feel like all that is that's really what the payment processing is always there, but nobody leads with that anymore, right? So it's like it's
almost like yeah, we know we need payment processing,
yeah,
kind
exactly.
of thing.
Like it's
right.
boring.
Yeah.
Like no one wants to talk about it. They just want to know it's there, right? So I think that's really what you're going to really see going forward more and more often than anything is just, you have these platforms that are set out to do a job for businesses and really kind of handle a lot of different aspects of their financial business world. And then as a result of getting those tools, you're automatically getting processing. And it's just not a conversation anymore, right? It's just like, hey, this is part of the platform.
Chase, who is taking the responsibility for something like a platform where it says you can create these courses. Kajabi does it, right? Create your courses, pre-sell your courses so that you have money to create your courses. But then what if those courses are not created by the deadline, similar to why probably...
And what if
they suck?
Exactly. They suck. They're garbage. Like, you never finish them, right? So there's all...
What happens? Who takes that hit?
Well, I mean, whoever set that account up is probably setting themselves up for a potential problem, but that's really like a hit or miss. If you're going to do something like that in our line of work, you really kind of just got to know who you're dealing with. But even then, if they scale super fast and they don't have an actual product yet, really, it could be really problematic.
I know, like chargebacks and refunds. Yeah. If you think of the back end and the processing of, just to process a refund, right?
So
it's like, and people they order, this is called 4PL, right? Reverse logistics. They order every day. Oh, I'll get 3 different sizes and let me see which one fits. And then I'll send it back. Oh, I want to kill myself when I hear that.
Well,
strategy.
The problem with the refund today is that if you do it through your merchant account, it takes 3 to 5 days for the consumer to get it, right? And they're upset. They want their money. And there's a cost to do that, right? So there's a transactional cost to do that refund as well. So you have like this trifecta of bad news happening. So as a card issuer in our platform, we actually allow our merchants to issue a refund through a card directly to the client's phone. And then they can earn money on the interchange that's spent when the consumer spends it. So kind of reversing the refund stuff on its head.
So you're giving an incentive to the merchant?
Yeah. So like instead of there being a cost there, the merchant's actually making money, but they can also solve that problem right away. So typically when a consumer wants a refund, they're not happy.
They want it now.
They're not happy.
Right.
So what happens is it takes 3 to 5 days because that's just the way that the banking regulation works, right? For a credit card refund. So the customer thinks that you're not giving them the refund because they don't see it. So they charge it back. So meanwhile, you issued a refund, they charge it back. You basically lost for the price of 2 or price of 1, you lost 2, right? But you also have maybe potentially a bad review now too, right? So what we do is we actually turn that cost, the refund cost, into profitable by issuing a card, a MasterCard, to a branded MasterCard for the merchant, whoever that merchant is, and we send it directly to the client's phone, and they can go spend it instantly. And there's a lot of yeah, exactly. And you solve the problem right away. And you actually are making real money though, because you're making upwards of 2.5% on that card spend. So instead of costing it 25 cents, you're now making 2.5%. So
Let me tell you a story why this has happened. Back in the day, there was an infomercial, and it was a butt infomercial, right? It was like a thigh thing. I don't know if you know this story, but it's very true. It took two media companies out of business, one of the most successful, Kent and Spiegel infomercial companies, out of business because they put an infomercial on the air. They did not have the product, and the infomercial rocked, right? So they took orders and they and they used all those millions of dollars. They ran the media, right? Knowing that they had like a 4-to-1, 5-to-1, probably a 10-to-1 back then. And they were making tons of money, right? But they had no product to ship. They used the money to get the inventory. The inventory was shipped from China. They shipped the inventory. It was all defective.
No, that's terrible. I mean, I know somebody that happened to for real. And then it just makes me think of that. There's that one blonde lady that was this. They said the blood is still a company. She did that blood startup. Remember, she raised all that money.
Oh, Theranos. Theranos.
That's right.
But this was in the mid 90s, and so this has created the where you had to actually, because the banks took the hit, right? The media companies went out of business. It was actually Williams Television Time, American Television Time, and Kent and Spiegel, and they went out of business. They had to shut their doors because they had so much money spent in media, right? To run that media, they just did it all on kind of like vapor.
Yeah, they're like,
it sound familiar?
Kind of.
Exactly. And then that spawned so the new rule is that if you're shipping a product and it's card not present, you have to have a shipper number, right there. It goes out for processing. It goes out for approval. And then the order is sent, and then a shipper ID number is sent back. This is all probably done through one of your systems also, I would assume, and then that gets attached to the order, and that tells the merchant or whatever, you can correct me on the names, to deposit into the bank, and because you are now shipping the order. So that's how it works. And there has to be an ID attached to every product that goes out, or some type of code or something to confirm this. That was all because of that infomercial.
Yeah. No, that's so when COVID happened, so we had some pretty large travel companies, like Expedia type. They're not that big, but they were pretty huge. And they were basically, if you booked a trip, they were essentially, I think they were utilizing some of that money somehow. And when COVID happened, everyone canceled all their flights. Same thing, right? So like those guys essentially were not able. Everyone who canceled their hotel stays, all that money was like spent, and that they were out of business like instantly. So
okay, so this is a good thing to talk about. How does ProfitPay protect their clients from this happening?
Yeah. So what we actually built specifically for this is to pay suppliers in real time, right? So instead of allowing the travel agency to sit on your cash and then maybe pay them or maybe not, right? Like they did in the old days, we actually can split transactions. We can split it. We can split actual money on the back end of a transaction. So if $100 comes out and the reservation was $95 and $5 was due to the travel agency, we can split it off at the same time from a transaction and pay the carriers and the hoteliers with a virtual card. And then we offset the cost of the transaction at the same time too. So we pay suppliers in real time. So we eliminate the risk of them doing what I just told you had happened in real life. And then by doing that, they also make money on the interchange that's paid in the vendor to book that reservation.
I know this is kind of like nerdy stuff, you guys listening, but I love this stuff. I don't know if you're on Clubhouse at all, but it was back when Clubhouse got their Stripe thing where creators could be tipped. Okay. And it might be similar here. We also have that where we can actually charge tickets here and things like that. So there is a processor, I think it's Stripe also, that is connected here. So
owns the world right now. So
they own the world, and they own the world because it's ease of use.
totally, 100%.
Because I can't imagine how the heck they're getting all of these accounts, because they are.
Well, yeah, no. That's what I'm saying. Yeah. So in people you don't realize like how much you actually are wrapped into these platforms until you start scaling, and then you realize that you're overpaying for everything. But I think that's the way though. So
well, here's where I was going with that. So everybody was talking, it's back when, there was so much chatter on Clubhouse, made you crazy. It's like, why are they doing this? Why are they doing that? Why don't they monetize? How are we going to monetize? And so I kind of chimed in at one point and I said, well, let's think about this. They said that the stupidest thing I ever heard was that, they were saying that they first announced it, and then they said, well, we're not going to take part of the transaction, right? We're not going to take a fee. We're not going to take up any part of the money that comes through here. And I'm thinking, I think I did a little podcast on it. I'm thinking, well, that's stupid. Why wouldn't you? Why wouldn't you just take a teeny piece of something? I mean, think of all the millions of transactions that are possibly going to be going through this platform. And then I think it was a month or two later, Paul, one of the founders, got on a town hall and basically admitted, well, maybe, and probably because Andreessen Horowitz basically said, are you crazy? We're not going to, that's the one way we can basically monetize. Now, this is only my opinion. I just think it made sense. It's like if Clubhouse wanted to monetize, honestly, if Fireside wants to monetize, Stripe is, Stripe's not giving them anything, even if it's just a penny. Yeah. Right?
That's kind of our biggest play in the marketplace is we're approaching it from a partnership deal. So like we'll give raw cost, and then we'll allow our partners to price it however they want to. And I think that's the biggest difference in the marketplace setting is because, and that's why most of our biggest clients in the marketplace are coming to us is because of the rigid guidelines and how it's really hard to actually, you have to price on top of what these high fees already, right? And to make any money.
So you're saying that you wouldn't negotiate the deal with Stripe prior to that? Because what is Stripe? Is Stripe a gateway? Are they what are they actually?
Stripe it's an all-in-one platform. So they basically have payments, fraud protection. They're a gateway. They're the whole thing.
So are they like you? Are they your competitor?
Yeah, they're competitors. Like we're competitors for sure. Sure.
Okay, so what makes it different? It says here that you do global and 22 different currencies, and you do global transactions. I don't believe they do yet, do they?
They don't. No. So we focus. So they're really great at payment processing. We can do that as well, but obviously competing head to head with what they're like in the marketplace, saying that they're the best at. We actually focused on the card issuing side. So and then for agency and ad spend. And we've been able to put together a platform that's able to issue in 22 currencies. So if you're spending globally, one of the biggest pet peeves is that like if you're in the US and you're trying to spend money for a global brand, and you have to reapply in Europe, and you have to reapply in Canada, you have to reapply in all these different places. So through our platform, you can spend locally, no matter where you're buying ads, right? So I think that's really where our unique differentiator is. And then of course we approach it from a partnership level on the marketplace side. So where Stripe basically has a 2.9 and 30 cents, we actually allow our marketplaces to rev share off of interchange costs. And then they actually can make cash back on all the card spend. And they also can price out the payouts. So the biggest part of the Stripe Connect cost is the actual payout module, which is 25 basis points and 25 cents. So for all, what that means is that if it's a $10,000 settlement, it costs upwards of like $20. So that's expensive.
Yeah, and that $20 is okay.
Right.
I totally get that.
You guys have to price on top of that if they want to make money.
Exactly. So it's just like anything else. You need to go to the source. If you can get to the source and you can get the lowest cost of goods, let's just put it that way.
Yeah.
You seem to have a lot of amazing clients, right? But what's your biggest pain point right now that you see for your company?
Just I think when you're growing and you're building an organization, just keeping processes in check and ever evolving. I think sometimes you set processes for things, and you're going in a direction, and you don't really go back to revisit it. And I feel like you got to just, because employees aren't necessarily looking at that, and so I think building processes that ultimately allow us to turn around and sell this, because what we're trying to do is build this to get acquired, right? To be able to get acquired, and that's the model. So it's just processes and things like that.
There's so much money that is often spent, and this is my where's the beef, all bun, no meat, right? There just seems to be all of this money going into a system where it's kind of like vaporizing into nowhere land, and then the 90% failure rate and 1 in 30 working. I have a show I did a couple of weeks ago where I talk about this, very similar to the infomercial world. But I was telling you before the show that we would actually have small budgets, test intelligently, grow, find the niche where it worked, and kind of, grow from there, as opposed to, I understand the spending of a lot of money up front in the tech space. I get that. And I get that it takes millions and millions of dollars to keep that going. But we also see that there is a total disconnect from maybe a startup like that is going to be membership based, getting to the point where they're going after their first round, and yet they still don't know how to get their customer. They still don't. I just had talk to somebody the other day, Chase, where they're like, oh, well, no. I said, how are you processing your cards for your payments for your membership? And, then you have to track your auto ships or your 30-day membership things, your attrition rate, your churn, your stick, all of this stuff that goes into it. How are you doing that?
Yeah, I mean, I think it's a lot of vapor. Fortunately for me, I didn't have the name when I started, right? So like I just bootstrapped 2 million and then raised another 30 million. But basically we had to prove model. Like we had to, it was always like us showing it. Like I didn't just have somebody give me a check for $100 million, right? And then just try to create something from there. But it feels like there's a lot of that for sure.
There's a lot of it. There's 90% of all startups are it. Yeah. Well, when you have a fail fast mentality, right? I get that. Test, iterate, but do it intelligently. Don't do it with variables, but don't, and I could be wrong because this is what's really happening. I feel as though if we could come together and find that fine balance of how can we take the wisdom of the past that actually created this D2C, B2C space, right? Created the best practices, created the functionalities, created, the marketing, the intelligent marketing practices, the intelligent media that happens, that actually has now culminated into what we call, you're calling it FinTech. But for me, it's like the most intelligent campaign management you could do is have it all in one place, like ProfitPay.
Yeah. I mean, that's the idea, right? It's just, I think the whole entire industry is all siloed. You have fraud companies, you have payment companies, you have, card companies, you have these companies, digital bank companies. It's like, if you can have it all in one platform, like I would never leave, right? And I'm like super simple. Like just give me the simple shit and I'm good, right? That's what I want. And I think that's what everybody else wants. And that's why Stripe is so successful, because it's so simple and easy, right? So I think, that's really the way, getting everything in one platform, making it simple, making it user friendly. That's really the way to create a lot of value.
It's kind of marketing 101, right? Yeah, it's like, it's actually D2C 101, what's the problem? Solve the problem, give the solution, bring value, and have people keep coming back because you're awesome.
I honestly feel like, the fintech space specifically is the hottest it's ever been. So there's probably going to be a lot more of like people throwing money around. But I think people are they're also vetting better opportunities because there's a lot more players coming into the space. So, the money is looking at who's the cream of the crop. There's a lot of cream, but like there's a lot of cream. There's not a lot of cream, actually. There's a lot of players, but not a lot of cream. So,
Okay, so there's a lot of bun and no meat
not
at the end of the day, right? Because yes, fintech is, my son's an artist and he was paid in Bitcoin. He was paid in $3,500 in Bitcoin. Okay. And now it's, I don't know what it is now, but that was a couple of months ago. And he goes, Mom, it's cool. Like I get to watch my money just like go up and down.
Yeah.
He said that piece that took me, 2 hours to do is now $5,000. So it's like, I made $2,500 to whatever. So, which is great. I'm more into the space where how can we really help bring it all together and just decrease the 90% failure rate? Because honestly, it makes me want to vomit when I see and think about the millions and millions and millions of dollars that are just going to waste. Back in the day when we would test with a little bit of money and then grow from there, which is what we still do. But at least we were testing with a little bit of money. We weren't throwing money away.
That's kind of the way. I mean, just the PayPal model. You get you put that 100 engineers, throw $100 million at it, doesn't work, everyone's fired.
Well, that's no way to grow up.
That's what they do.
I'm sorry. That's just not a way to grow up. I want to ask you about future casting. How do you do that as a founder? How do you future cast, and how far are you future casting?
I try not to do anything longer than 2 years. Just because it's like so pie in the sky at that point. Business changed so much, and we're dynamically always, trying to move the needle in one way or another. So to do it any longer than 2 years, it seems just not conducive to being real. We're really looking at we measure ourselves every month, but we manage that by the week. But ultimately, future casting 2 years.
2 years. 2 years is great. Yeah. So it's a weird question. People ask me that all the time. I don't know why, but they do. And I say, well, I haven't got a crystal ball. I have one more question, actually, that I'm really interested in your thought on this. People, brands who were not into D2C, they're retailers, let's say Gucci, everyone had to shift. I was on a panel with the gal from IKEA. Even IKEA really struggled to find a way to shift to the D2C model, right? They have admittedly not known anything about payment processing or about setting up any type of UX, customer service, everything that went with it, right? They just really struggled. And most of them have basically said, we've learned and we've now adjusted everything. And we're really looking forward to the future of being able to blend D2C with retail, which D2C has always been blended with retail in my world, but D2C with retail because, let's say Macy's.
For big brands, we actually work with a lot of D2C brands, but they were scaling even more, right? So we just saw, especially payments in general, it skyrocketed,
Mm-hmm.
Yeah,
I'm sure.
so.
But my question really is for the ones that weren't D2C, right? Which I would think would be a great target for you. It would be like the big brands that refuse to be D2C. Pandemic comes along, they're forced to be D2C. They create the systems, they do all of that. They make their mistakes. They learn how to navigate those waters of D2C. Now they actually have to have customer service, return policies, all of that stuff, 3PLs. You didn't. I just think that probably would have been a prime place for you guys to swoop in and say, "Hey, we're really a great."
Yeah,
solution.
no, it would have been. We were heavily in the travel space at that time. So we basically signed up multi-million-dollar to two of the largest travel marketplaces in the world. Signed some pretty huge contracts, all in January, like 2020, right? Just ramping up for like a monster launch. And then February 2020, COVID happened, right? So travel went to nothing. So basically we actually rearranged our model, and then we were going more after the small to mid to upper echelon clients and marketplaces. We kind of had to transition to our model. Otherwise, we would have went after those brands directly. I mean, it sounds like a good opportunity. For sure, they all had to do that, but we weren't really focused on that. We were focused on...
Exactly. That's interesting. Yeah, I wasn't really focused on it either, but there seemed to have been a lot of pain going on out there now after the fact, right? They're now admitting it. I mean, that there was some real internal problems as to figuring out this whole D2C thing, right? And now they're talking about, well, how do we blend it together? Because they don't want their retail and their foot traffic and all that to die. But anyway, that's a whole nother podcast. I think FinTech is a very, very interesting space, and I know that it takes a lot of money to make it work, but it's the engine that drives the world. It's the engine that drives the world. So thank you, Chase Harmer, for being here today, and good luck with everything. I'm sure. Well, I hope we talk again soon.
Yeah, for sure. No, thank you so much. It was a lot of fun.
You're welcome. You're welcome. You can find Chase Harmer at ProfitPay.io. I highly recommend you do learn more about what it takes to be involved in the FinTech space and how important it is to your tech startup. I'm Wendy Cooper. I'm your host. This has been Where's the Beef? Tech versus Creative. Advertising, marketing, technology in today's culture. Thanks for listening, everyone. I will see you next week. Here's the official pickup to end the show. This has been an edited edition that was recorded live on Fireside. Some portions have been edited out for your listening pleasure. I am the producer and the host and the editor, and I am CEO of C-Spot Run Productions. You can find me at wendycooper.com, and you can find me at the letter C, spotrun.com. Thanks for listening, everyone. Theme music by Tom Orsi, all rights reserved.